Welcome everybody to another exciting episode of Bo Pete Talk. My name is Robert and with me is...
Wida.
Welcome everyone. We're going to dig into the idea of speculating what could happen to our tax system. That's right, a good old tax system in Australia, particularly capital gains tax. We've certainly commented on superannuation in the past in terms of if you have up to, or balances over, $3 million, what the tax would be. But this is looking at the capital gains tax discount from 50% to 25% for assets purchased after a certain date. So what effectively means 70% of the capital gain would be added to the taxpayer's income and taxed at their marginal rate. So that's a possible change. It is speculative at this stage, so we will talk about that. But to start with, going around the grounds, so to speak, we'll start with our good old fun cryptocurrency. There has been big movement with Bitcoin, of course. It's hitting some magic milestones. Here in Australia, it's hit almost $190,000, while in the US, I think it's getting close to the $130,000 a coin. Might not have that number exactly right, but certainly it's gone well and truly past that magic 100,000 mark. Some of our coins that are good fun. Peter, you'd be keen to know your Pengu is up 8.8%, your fun meme coin. Bonk coin, 9.8%. And I'm just trying to find your favourite, the fart coin. Where's that sitting at? I thought I saw it before.
Well, I thought you forgot for a second. I was going to say my all-time favourite is. I think we haven't been doing enough episodes as of late, so the fart coin's going lower.
Yeah, maybe we need to pump it up and tell people what is going to be the best coin ever.
Exactly.
Its utilities are going to be phenomenal. Looking at the Dow in Australia, we've gone up slightly today. Today being the 15th of July, Australian Eastern Standard Time. We're at 8:14 in the evening. It had a reasonable day of 0.21% up for the day. That's the Dow, that is. Looking further along for the past 5 days, it's been up 0.18% for the month, 4.5%. The NASDAQ, where you get all your big US, IT stocks especially, that's up 0.27 for the day. If we go for the month, we're looking at 4.77%. Zoom out, when in doubt, for the past year, it's been up 11 for the NASDAQ. And the Dow in the US, zoom out, when in doubt, for the year, up 10.56%. So things are ticking or purring along nicely on the charts, so to speak. Okay, let's look at back in Australia tax. Maybe our episode is about tax and why we are scared about what could happen to tax, or possibly are we being taxed too much. I want to start with this idea, Pete, and I want to throw it at you. With tax, we pay income tax, pay as you go in Australia for most income, hardworking Australians. On top of that, the Liberal government brought in GST, and the GST in Australia is 10%. Is that a double tax to start with?
Yeah, well, if you look at it, anything that you pay with after tax dollars, which most salaried employees actually are doing, so that means the GST is a tax on a tax already, just based on that.
It's funny because when you do a search on it, and I've spoken to accountants in this space, by the way, they will say no. And the argument centers around, now I'm going by definition here, a type of consumption tax, a value added tax, sometimes referred to as VAT.
Yeah, but they still will argue if I've paid tax from my wages, so I don't see any pre-tax dollars on my side, so I'm getting all after-tax net income into my account, and then I'm spending something and paying 10% on top in tax. That's a tax on a tax, because I've already I've already paid tax. Now, if I was a business and I received 100% of my income, and then at the end of the year filed for my tax returns based on my profits and losses, that's a different story. That's not a tax on a tax then.
Okay, let's look at it in terms of this way, the scenario that I have in front of me, okay? And then I'll get you to comment. Manufacturer buys a raw material for $100 and they pay in Australia, that's why it's a nice number to use, $100, 10%, so $10 GST. Let's go to the next stage, okay? The manufacturer sells to the wholesaler, yeah? So they sell the finished product for $200 plus $20 GST. The manufacturer remits, the wholesaler sells to the retailer. He sells a product for $300, let's say, plus $30. The wholesaler paid $20 to the manufacturer, the import tax, and then the wholesaler remits $30 minus the $20 to give the $10 GST to the ATO. So, finally, the retailer sells to the final consumer. So we've gone through the stages here: manufacturer, wholesaler, retailer. Now retailer to us, the consumer. Sell this product for $400, so another $100 on top. Each time $100 on top, if you notice what I'm going
Yeah,
through.
yeah,
So obviously the GST is $40 now, 10%, yeah? The retailer pays $30 GST to the wholesaler, and the retailer emits $40 minus the $30, so it then becomes $10 GST to the ATA. To simplify it, the manufacturer added $100 in value and effectively paid $10 in GST. The wholesaler added $100 in value and effectively paid $10 in GST. The retailer, likewise, $100 in value, adding that is, and effectively paying $10. And the total GST collected by the government is actually $10, $10, $10, $30. Final consumer obviously pays $440 because of the $400 plus the $40 GST, which includes all the value added through the chain. So the consumer is paying, evidently, that
yeah,
$40 GST on there.
yeah, exactly.
The argument is the system ensures that while tax is collected at each stage, the tax on tax or cascading effect of the traditional sales tax is avoided because businesses effectively only pay GST on the value they add. The total GST ultimately borne by the consumer is 10% of the final price of the good or service. So who's this helping out if we look at it this way? It was quite confusing looking at this example.
Well, no, it helps. It helps the government in taxation, um, because for one product, um, they received $30 that is unavoidable because that's the value that they added to the at each
Mm,
stage, right?
mm,
Because if you look at, say, for
good.
example,
Excellent explanation.
yeah, yeah, you can't avoid that because it has to be paid, right? Whereas when you look at, say, companies, there's ways that you can minimize your tax liabilities, but with GST, you can't minimize that liability. It's a tax that has to be paid. It's almost like a tariff, if you're going to look at it in a different way, and that's something that's been happening in the world today.
So in essence, the payments of the tax is passed from the manufacturer onto the wholesaler, then the wholesaler onto the retailer. The retailer, is that correct? Then
Yes.
passes it on to the consumer, as well as the government, just before it goes to the consumer, collects $30 from the accumulation of the manufacturer, the wholesaler and retailer.
Yeah, yeah, and each stage they're only getting $10 from each organization, so to speak, or each step, but cumulatively
Mm.
they get the full $40 because even then when the consumer buys the good,
There's another 10%.
there's another 10%, right? And that's why I say it's a tax on tax, especially for the consumer. Along the way, for businesses, yeah, it might not be a tax on a tax, but the consumer's being taxed twice.
Well, they are, aren't they? Well, we're saying they're being taxed twice because the money that you have in your bank balance that you're spending is the money that you've earned. The money that you've earned has already been taxed based on whatever tax bracket you belong to. We're assuming you're past the threshold. So you're being taxed And that money you have is then, whenever you buy an item, is then getting you're paying another tax. And if I go fill up at the petrol station with petrol, I'm getting taxed again. So looking at that, the petrol for moment, because that's a big one. That's a big revenue, if I'm correct.
Yeah, the fuel excise.
As of mid 2025, the rate for most petrol and diesel, this is the current rate for the fuel. And thank you, you used the correct word there, Peter. Fuel excise is 50.8 cents per litre. The rate is indexed twice a year, in February and August, in line with inflation. So that means, am I correct in boldly stating we're also paying for it there as well?
Yeah. So when it gets indexed, it's essentially a tax on a tax again. Not as nowhere near as much because there's such low numbers we're talking about here. Because inflation generally is 1-2%, unless what happened in the last couple of years where we've had high numbers. But the indexation is so low, but we are essentially getting indexed on taxable prices as well.
So we're getting taxed here, but we're also getting taxed GST on the fuel as well.
Yes, yes. So then once the excise is applied to the fuel, we then pay the GST on top of that.
So going deeper now, the most important thing for us is our health and our family. So maybe the order should be family and health. And for a lot of us, it might be God in there. But let's look at health then, in that case there. Is health for free in Australia?
It depends on where you fall. If you have private health cover, not so much. If you fall under Medicare, it's also not free, but it's heavily subsidized.
Heavily subsidised, but it's not for free. We pay in Australia 2% of
Yeah,
our
Medicare levy.
taxable income, and that's
Yep.
each person. So if you're married, each person pays 2% of their taxable income.
That you also get if you don't have private hospital cover, you also pay extra in terms of a surcharge as well.
There's another tax. Okay, let's look at what we need to have. What do we need as human beings? Health. What else?
Food,
Food. So food's GST. Yeah. Is that not all food, but is it? So
not not all not all
let's
food.
clarify that. Let's clarify that. So what food isn't? That's important to note for our listeners.
I believe staples, like staple foods, that are not GST. So I'm just doing a quick. I'm bringing
So
this up.
if I'm correct, you correct me if I'm wrong, fresh food doesn't have GST. Is that correct? Or do I have that wrong?
So fresh fruits and vegetables, raw
Yep.
meat, poultry, seafood,
Yep.
eggs and milk, bread without fillings or topping. So it's staple food. Basically, like it's your base foods that make up a meal are GST free.
All
Uh,
right.
a
What
good
else?
example of
Yeah.
what wouldn't be is tomato sauce. That's
Okay. Yes. Right. Now what else do we need?
so we've covered food. We need shelter after that. I'd
Well,
imagine.
let's look at, okay. Yeah, shelter. Okay. We know the problems with the housing crisis in Australia. It is an area of major discussion in Australia, and we'll talk about some of the ways the government possibly is looking into this space. But what about water?
Yeah, well, I considered water under food, so I thought we covered it. But yeah, you are right. Water is a necessity, probably more so than food and health.
Okay, have people always paid for water in Australia at their household?
No, I don't think so. I think it came in. I don't know when it came in though, but I don't think it was always we paid because it was a necessity.
So what I'm getting here is that when you keep looking as well, I'll read what I found. In Australia, often referred to a time when household bills didn't directly itemise and charge for consumption per kiloliter, of course, excuse me, or when the cost was so heavily subsidised that it felt negligible compared to today's pricing, which reflects today the true cost of sourcing, treating, and delivering this essential resource. So, what did we pay for water in 1980? I guess would be the Question, would it not
Yeah.
be? Thinking about
I will add
yeah.
on top of that. I don't know if you've seen a water bill recently, but I know I have. And the biggest charge that we pay in terms of the component of it is the sewage charge.
There you go. There you go. So one source indicates less than $1 for 1,000 litres was considered cheap in the 1980s compared to today's rates, which are often $2 to $4 per kilolitre or more. Okay, there you go. I guess what we're trying to get to for our listeners, I mean, we could be a little bit more factual in this space, but we're getting a bit of a vibe here about the best things in life are free. I don't know how true that statement is in the 21st century. We seem to pay for everything. I mean, electricity. I'm not saying that we shouldn't be paying for it, but I'm still struggling with that one, Peter, given that we're a mineral rich resource country and I would argue in the past a very innovative country that we're paying so much for electricity and it continues to be a major issue. Now, there are some solutions in that space that are being thrown around. Obviously, government subsidy towards solar panels and batteries.
The ultimate solution would be if we taxed the companies that are exploiting all our minerals that pay minimal tax.
Yeah, that I've heard that as well, and it's a really interesting space to truly look at. I'm going to look at an an article now. This is ABC News, Monday the 14th of July, and this is what stirred this conversation for us. And the title of the article is about raising taxes to fix budget. Treasury advises Labor in an accidentally published advice they were given. So it's still, that's what I mean by speculation. In short, and this is what ABC say, Peter, Treasury advised the government after the election that its 1.2 million homes target would not be met. According to briefing notes sent by the ABC, the department also told Treasurer Jim Chalmers taxes would need to be raised. That's where the big conversation has been. And spending reduced if the federal budget was to be sustainable. And that's the big question. Where are these taxes going to come from? And what have you read in this space? Or have you read anything? Because it is still up in the end speculative. Yeah, you can see a lot of TikToks telling you the end of the world's coming and they're going to tax us so we become a socialist country. Where do we sit? Okay, I'm going to throw it over to you, but just to explain for everyone. One of the things about the land of golden opportunity for us as a nation has been that people could come to this fine nation in the past with a suitcase and build quite a fair bit of wealth in terms of the home, the roof over their head for their family, and then invest into real estate and have investments. And not just real estate, it could be shares. Shares became a big thing as well and are a big thing. And what happens is when you sell them, Labor Party brought this in under the Hawke and Keating, there is a capital gains tax, some more tax for the government. Now, the way it works in simple, and you can correct me, Peter, in this, is that if you hold on to it for longer than a year, then you pay, in terms of tax, let's say you make $100, you're only going to pay tax not on the $100 you made, let's say $100 you actually make, let me say that correctly, you pay $25. That's right, 50% of 50% tax on that 20. So $25, whatever your tax sits at tax time. How did I go explaining that, Peter, in terms of what we currently have with capital gains tax?
I'll try and simplify it a little bit. The example is I buy an asset, doesn't matter what it is, for $100 today, and after 2 years I sell it for $200.
Yep.
That means I have a capital gains of $100.
Yes, that's right. Yep.
Now, instead of that $100 going straight into my taxable income, because I've owned it for over 12 months,
Yes.
only half of that goes into my taxable income. So I'll only be taxed on $50, and that goes to my tax rate, whatever my other income.
Can I correct you? I thought it was, and this is where we'll get this clear right now, where it was a case of it's going to be 50, it's going to be $25, in fact, 50% of that $50.
Yes, so now that the speculation is, or the word is that they're looking to reduce that discount by another 50% to make it only 25% discount if you've held for more than 12
So
months.
that means $75 you're going to be paying tax on.
That's correct. Yes.
So you're declaring $75 income. That's what we need to understand the lingo here in terms of your taxable income that then
Now,
gets taxed.
and the interesting thing is the way that they do it is you can't avoid in terms of, I guess, making up the numbers. Because if you bought an asset for $100, for example, like using my example, that's something that's recorded and potentially will need to be proven. And if there's no proof, an estimation has to be done based on what the market value is at the time. And same thing goes on the other end when you sell. And when you do your actual return for in tax, you need to put the raw numbers in there. Right. And then within the tax portion, the calculations are made. So this is like when you're actually filling out all the paperwork. So you need to show the beginning, the end, how what discounts you want to apply, or what other methods you can to, I guess, adjust your capital gain. So there are other things that you can do which we don't need to get into for this example. And then you come out with your capital gains figure at the end. But that's all recorded in your tax return.
Yeah, I'm glad you explained because I went 50% on 50%. That wasn't right. That wasn't right. So I'm glad you corrected that because it actually, as you pointed out, 50% of your capital gain is then declared as part of your taxable income. So the example you gave, which was good, to $50, that's a good one, is what you then declare or add to your taxable income, as opposed to what the speculation is $75 it could go to. And that's a fair bit, isn't it?
Well, when you look at it, then it's almost a discouragement to, I guess, realizing your capital gains, or sorry, or realizing any gains, because you might as well keep it in the system longer instead of pulling it out, because yeah, you have to pay such a large amount of tax on it.
And it also includes grandfathering provisions, meaning that assets acquired before this implementation would not be affected. That's what the speculation around there.
Yeah, the speculation I read as well about it was from July 2025, sorry, July 1, 2025. That's the cutoff date for the grandfathering.
Now, I was having a discussion tonight, believe it or not, in this space, and I was listening carefully to somebody else, and he was chewing the fat moment with someone else. And they were pretty certain that the Labor Party speculated previously an idea of limiting negative gearing. I think I remember that proposal, but they explained it in another way where they were adamant that the negative gearing limited would be to existing dwellings to encourage people to get the negative gearing from newer constructed properties. And it could rear its ugly head again because Labor Party are in government and they have a majority government. Labor historically proposed limiting negative gearing to only newly constructed properties. That's a pretty interesting way of looking at it. And the argument for that, this is an interesting argument. If you do that, that means the other properties are open in the market for first-time home buyers to snatch up. Because at the moment, obviously, a first-time home buyer is competing against investors, and that's what the argument's about. How does that sound to you, Peter?
Well, if they're worried about first time home buyers, there's a much easier solution than what they're trying to
Mhm.
do there. So it's definitely not for home buyers that I guess their proposal that they want to put forward. I would say it's solely to encourage the deficit in supply that we have in terms of housing.
Yeah, that's right. That would be and that's what I'm trying to wrap my mind around it is, or my brain around it is that the idea is that obviously they're freed up now, supply and demand, yeah, Peter? And that means that this current difficulty in people getting a place should be freed up because you've discouraged investors rather than people needing a home. Is that a simple way of trying to get my head around it, Peter? or not quite?
Yeah, I mean, it discourages them to a degree because, like, to be frank about like investing in the housing market, like it's not solely negative gearing. Like, what happens if you've got cash and you just want to invest your cash into the property market? It doesn't stop those people because they will just buy the house outright and they couldn't care less about negative gearing.
It'd be interesting to know the data in that space in terms of it, whether it would make which you're pointing out here, whether it would make a big enough dent to free up property in Australia. But the problem you also need to consider, I think, in this is that let's say Labor do go down that path, speculative, of course, because it was a historical, could rear its head again. Let's say they limit negative gearing. Now, with existing arrangements grandfathered, as we said before, so people don't start panicking and in the streets, I think Labor Party would think of going that way. Let's say that they do go ahead with this model. That doesn't mean the price of houses, or will they? They're not going to really go down. I don't think a property's as such going down. Will it slow down the appreciation of homes? That's a area to consider. Or they're not going to really, I don't see them going down that much, or would they? Because the reason why I asked that question is at the moment for young people, first time home buyers, it's affordability, isn't it? That's
Yes.
their biggest problem. I don't think it's the fact that they're competing. Well, they're competing against investors. Investors are pushing the price up because more people want the place. But traditionally, property really doesn't go backwards, does it, so much? It adjusts in price, but not that much, would it?
Well, you got to also think as well, like one of the biggest misconceptions, and like when I think about it more and more, people always will say, "Oh, it's the investors that are propping up the prices."
Mm, mm.
If the homes weren't worth that, they wouldn't pay that much, right?
That's
Because why would
right.
an investor pay $1 million, right, if for an overinflated asset that in 3 months' time is going to be worth 700,000, or even if it's worth the same amount in 3 years' time? They know that it's going to continue to appreciate at a certain rate, so they invest in the price that it is now, and they're happy to pay for it.
Yeah, okay. It's a really interesting one, and you want to hope that the government has put that necessary economical modelling in there. And because remember, we're trying to do that, and we're not doing that with real live data. And possibly it might be a case of looking at what's happened globally in this space in terms of the confidence and the consumption of properties when this is put into place. I'm always interested in other countries where some countries, and we're starting to look at this space, affordable housing as part of our solution.
Well, look, the easiest solution that I've kind of come up with when it comes to making houses more affordable is limiting light residential to be like you're only allowed to hold one piece of land as an individual in light residential, or a business or anything like that. Or actually, I wouldn't even allow business investment into light residential. So they're made for families, or if it's not families, it's the government producing the homes for lease to people that want to lease.
I'm trying to understand that, what you mean by limiting light residential to. So that means if I owned a place, I couldn't then buy another place. Is that what you're saying?
Well, that anything that's zoned light residential. So I think that's us when it comes to
And
planning.
so where would I then be able to invest for our
And
listeners?
medium, you can still invest in medium residential, so that would include like apartments and stuff like that.
Okay.
And anything that's zoned medium residential. So interestingly enough, like if you look at there is a planning portal website, I know for New South Wales, and you can see the zoning of what areas are zoned at.
So the medium is mostly apartments. Is that correct? Is that what we narrow it
Not ne-
down to?
not necessarily. There are other, like, more like unit style. So not necessarily apartment unit, but I mean unit
Units,
as
yeah.
in housing unit.
So that's where you have to obviously deal with body corporate.
That's correct. Yeah. But see that the idea of that is it frees up all the light residential for families and people to buy into. So you actually, and if people can't get into that market, the government steps in and builds, and I put this in quote, the housing commission houses of what they used to do
Yeah, they're
back in the
missing.
day.
Yeah,
And then, when it comes to our the rest of the real estate, your medium and above density, that's where you start to have your investment go into there. So, we can see those big projects being done and completed, rather than having, a house with, for example, what we're seeing now, 700 square meter blocks being turned into two, three,
yeah,
300 meter square
duplex.
meter blocks. You know what I mean? It's like really kind of slumming some of our well established areas.
Yeah, yeah, and that's where they put I was just saying there, the duplex model.
Yeah, yeah, and they're not made like the blocks, the areas were never made for that kind of traffic when it comes to people living in the area, and let alone even the cars in that, like the extra cars, because there's more families taking up the same space. So it's really such a poor sight to see, and it really, I guess, cheapens the dream of having that family home, like that's we've discussed in previous podcasts.
Interesting, isn't it? Because I find it really interesting. You can see the governments attempting and wrapping their head around the budget, of course, and trying to get that in the surplus. And a lot of times the solution gravitates around tax. And one of the things we benefited as a nation from careful economic management, whether you agree or disagree, there was a surplus there during the Liberal governments at the time. We're talking about historically here. And a lot of that, if you want to call it future fund, dissipated, particularly when we had COVID. And that was a Liberal government. Remember Morrison's government in power. So this isn't a political bias that we're having here, Labor or Liberal. And then Labor have continued to what would be seen as use a lot of that loose change, if you want to call it. And now we're obviously, like many countries, in a position of, well, how do we recoup and somehow solve our deficits? In the US, they're doing this via tightening the belt, and a lot of the agencies, as we know with the Doge agency, tariffs have been looked at and are strongly being used. And as we speak, there's even more news in that space, more of a political one rather than an economic or beneficial one, where I think Trump's not mucking around with Russia and he's trying to up the ante in terms of tariffs as a punishment. So the US is going about it different. If you're talking about running parallel in the sense of trying to solve this economic dilemma for generations to come, which is inheriting deficits and not having budgets in surplus, both governments, US and Australia, are going about it differently, I would argue, Peter, at the moment, given what I just said.
Yeah, yeah, I definitely say they're looking at it from different approaches. See, I always look at, the best way to I guess fix budget deficits is to review all liabilities, especially those that are like unfunded liabilities. And by unfunded liabilities is that the generally when if you want to introduce a new scheme, you have to kind of have a tax in place or some way of funding that new scheme. And you can't just will it into existence and then expect to not have a deficit then.
And sometimes that's where people start to, and we've had that, and we could get controversial where money is spent on sometimes what would be deemed programs that are ineffective and wasting. Historical examples like the Grocery Choice website, a price comparison site that cost millions but was ineffective and scrapped, as an example. And that's a good one to give because it doesn't border on, and we could get contentious in this space, how money is spent.
Yeah, but see, on a flip side, I guess to put another side in terms of some like a similar thing, you got the Fuel Checker website that's
Yes,
been introduced, and that's a huge success because people use that to find,
yes.
they're examples of something that failed miserably, and I guess something that's, I would say, has succeeded.
You can look at other examples of failures. I'm going down the half. You're going the glass half full. I'm going the glass half empty. Large scale government IT projects, for instance, the infamous MyGov system, the issues they had with that, or past issues with Centrelink systems leading to significant wasted funds. That has been claimed, although on either side of the aisle they may disagree with that. But there's a variety of committees, I'm sure, and parties and think tanks. We've had think tanks in the past that could be looked at as squandered money, but it's a really interesting space because we haven't gone down that, I feel, down that path of scrutinizing or having that as a way of saying, okay, if we really want to solve a lot of our money issues as a nation, let's look at wastage or money being thrown around. It's gone a different tact at the moment, and it'll be interesting to see. And it seems to have gone down the tact of taxation at the moment. Good old tax.
Yeah, and I find a lot of the programs that have been implemented, and they're so rooted into legislation or some it's like other things that are essentially almost forces the government to not be able to cancel those programs. And I don't want to go into it like it's not
Mm.
like that this type of topic, but yeah, they're kind of stuck. They have to keep these programs running, and part of it's to keep political face as well. But it's running the country, into deficit.
All right. Here's a question for you in terms of this. Since we're in that space of tax, 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 Peter, how do we sit in terms of other developed countries in terms of being taxed? You ready to be enlightened in that space?
We're not the most taxed.
We aren't. That's right. We're significantly below, believe it or not, the OECD
Yeah, yeah.
average, typically sitting in the lower half of these countries, around 28 to 30% of GDP. Here's some context. European countries, France, 43.8% in 2023 in terms of the average tax GDP ratio. Okay. And Nordic countries having much higher tax to GDP ratios. Mexico has one of the lowest, if you're interested to know, at 17.7%. And we're relatively low. The average tax for us was 33.9%.
Yeah. That sounds about right. That's our off income tax though, because that's our average wage.
So really our perceptions maybe change when we look at other countries. And in fact, our GST is fairly low, isn't it, compared to other countries? A
Yeah,
lot of other
yeah.
countries have 90.3. They're not looking at their GST, or are they? Are they looking at the GST? Maybe that needs a touch up.
No, I think it would because when you look at it, we've got a tax-free threshold that, so say if your tax rate is 33%, it
Mm.
doesn't mean you pay
That's
33% tax,
right.
all right? You're paying less. It's probably 20% of your income is tax.
Because,
But
yeah,
then
that's right.
when you add the GST on everything that you buy,
Yeah.
it's roughly 30%, again.
Yeah, it's really interesting when you start to dig into these taxes, and it seems to be a place that we're looking at. What impact will taxes have if we increase GST, the tax? Does that have an impact on inflation then? Or are the inflationary figures factored into that?
Yeah, that's a good question. Um, Because realistically, if you accounting inflation with GST or without it, it makes no difference because it's a flat tax, right? But if you then increase that tax, that's when it makes that difference in inflation.
One-off effect. The economic analysis of the GST introduction, that was in Australia July 2000, by the way, showed a significant but transitory increase in inflations. So, from the University of Wollongong, out of all places, and the RBA noted that the CPI saw an abnormal spike around 2.8% nationally. In September, the quarter of 2000 coincided with the GST introduction. This was a level shift in prices. There you go.
But would you like kind of like say if they don't include the GST in that calculation, like say when there is a tax change like that, I'd be considering that some vendors might have I guess used that opportunity to
Yeah.
gouge. And from memory, I believe that there was a tax cut to our income tax when the GST came in.
Okay.
Obviously, not the same level as what the GST brought in, but
Yeah.
so I think they utilize that to kind of that transition to kind of gouge the consumer a little bit there.
Reading some of the pundits here, they're saying it would lead to an immediate and significant jump in the CPI, headline inflation, in a quarter is introduced.
Yep. Yep.
Whether this translates to a sustained or higher inflation beyond that initial jump will really depend on the impact inflation expectations and overall exaggerated demand in the economy. And now the government, and of course, never forget the Reserve Bank's response, the RBA. Because what's interesting in that space is that interest rates stayed as they are, but they are on a downward trajectory. Um, and they're believed to continue to possibly go down at the moment, if in the next few months. It's speculation. We're not giving financial advice, but that's an area certainly to keep an eye on because
Yeah,
speculation is,
that's the trend I see with it.
yeah, it's interesting. That has an impact, doesn't it, as well, of course, in terms of cost of living and if the interest rates keep going down. Not so good for investors, but certainly for first home buyers and young people, what is it, Gen Zs, yeah.
Yeah, but I would argue when interest rates are low, it's a good time for investors because they can borrow more to invest into say the market in as a whole, and I would say
Oh
like
yeah,
stock
true.
markets, things like that, because it's a lower repayment.
Yeah, I guess I was looking at investors, the old traditional ultra conservative investor that puts money in the
Oh
good
yes,
old bank.
fair.
You wouldn't be. You're right. There are different levels of investment. We would encourage different forms of investment, possibly with that. It's all very interesting. It's all connected, interrelated in some way. And of course, there's one little thing in the background that percolates along. The state or the health of the economy is very important because all our superannuations, we want them to keep going up, are impacted by the health of the economy. And especially, let's not forget, those people at that age of considering retirement as we speak in the next year or so, they're always going to be obviously making that decision finalised, if you would like to say, based on the health of their super balance. I think I mentioned on a previous episode, I do know people many years ago, I think it was the 2008 crash, where they decided to put off their retirement for it took several years before it recovered their super balance. It could mean another 5 to 10 extra years working for some people if they're really truly relying on that. Or they may need to rely on the pension, and that will impact the government, of course.
Well, that would mean more taxes again.
Yeah, because the government would have to fill the void, won't they? In
Yep,
many ways.
yep, yep.
So interrelated. Wow, what an area. What an episode. What do you think, Peter? We've had a really informative. I've learnt a lot, to be quite
Yeah,
honest,
yes.
in this.
So have I, surprisingly as well. I thought this was going to be in the bag, but no, I've actually learned quite a bit this episode.
If we were to summate things, though, we glossed over it, and it'd be worth looking at a bit more data. I find it really interesting that it's easy to look at the state of play in Australia and be extremely critical when you're in the mire, so to speak, and living day to day and paycheck to paycheck. You think, geez, we're not a very good country and we're struggling and we'd rather live in another country the way we're going. But when you actually dig deeper, it's still a pretty damn good country, this country called Australia. I think we're still sitting okay, Peter, at the moment.
Yeah, yeah, and look, the most interesting thing when I think about it, another country might be better to live in. All you have to do is look at the world map in terms of drinkable tap water. Yeah, and that
Yes.
and that will tell you everything in terms of quality of life there.
Let's touch on that. We're going to wrap it up, but we should touch on this because you and I had a really good, interesting, insightful conversation a few days ago about this. Because when I started looking at countries where you have drinkable water, I was surprised that in many parts of China, drinkable water still doesn't happen. And if you want to go to Malaysia, good old Kuala Lumpur, lovely places in the world, drinkable water doesn't happen still. That's safe to drink.
Yeah, yeah. I mean, you can drink it. It's just that. you'll become very sick. And I'm sure Aussies that have gone to Bali know all about Bali
Yeah.
belly.
A lot of the times also, just to touch on this space, is you're advised to boil the water and you have to be careful of the ice that's used. Obviously, there is possibility, and I'm not a health expert, so some of our listeners might be coming down complaining to me later on, but maybe your body eventually climatizes to drinking or having ice or whatever it is in these countries eventually. I don't know how that all works, but certainly you're advised to have boiled water in a lot of parts of the world. I find it very intriguing that a lot of parts of the world they use a lot of bottled water, Peter.
Yeah, and that's because they have the proper filtration plants, these bottling plants.
Mm,
They filter the water properly. Then they also make sure that the water's sterilized. So it removes obviously the sediment and particles that are in the water. That's not something that will make you sick, but it can depending on what you're drinking. But then secondly, when it's sterilized, it removes all those bacteria, parasites that are in the water that can actually, that's what actually does make you sick. But look, realistically, if you have a good gut environment in terms of
mm.
you are less prone to feeling ill. Don't take that as advice that you if you know that you can drink whatever you want. Like you'll still get sick because it's a battlefield over your body all the time.
Interesting, isn't it? People that live in India in the Ganges. Is that it? The Ganges over
Yeah,
there?
yeah, the Ganges, yeah.
A lot of them, they live and die and you name it in that river or that delta. And it is a delta, isn't it? It's a big water
Yeah, I
space.
believe it
Yeah.
gets into a delta towards the end. Yeah.
And it's a massive water space. And a lot of people live along this waterway. And for tourists, they're obviously told to stay, steer clear of actually even dipping your toe in the water pretty much. But a lot of people live there, drink, bathe in it, and they're all good. And their bodies have obviously gotten used to it, if that's the word, or maybe it's in their DNA where they can live in that
Well,
water.
yeah, the easiest way I can think of it is like think of when you have a newborn baby, right? And the aim is that for the minimum for the first 6 weeks of their life, you want to limit their exposure to the outside world. And the main reason is because you want they only have exposure to the environment of your home, so they don't have bacterias from your neighbor's house or two blocks away, because they won't be able to I guess resist that bacteria. They only have what's in the home from mum first, and then as dad gets introduced, and then other siblings. So if you think about it like that, it's the same thing when you go overseas. You have no exposure to the biome that's over there, and just to expose yourself in there is a shock to your body. Eventually, you do get acclimatized to it because the microbes in your gut change as you start to acclimatize. But we're talking probably a year or 2 years before that starts to happen.
Yeah, it's really interesting. I don't know how we managed to do it, but we did manage to do it. We managed to go from all that stuff about tax to we ended up in water. I guess
Well, it is important, right?
yeah, it's another. We did start the episode with looking at what did we consider important. Yeah, you're right. What do we consider important? So we finished on, I think, the most important thing because we can't live without it. That's water. So it was good to touch on that. It's been an exciting episode. I really mean that. It's been very insightful. Thank you, listeners. My name is Robert, and with me is
Peter.